afternoon, everybody. Welcome to TraderMerlin Show. It is your Thursday edition, getting to the tail end of the week. It's the day before earnings season, so earnings season kickoff. So welcome, everybody. Good to see you all up there. Hope you had a good trading session. I hope you're watching the crypto markets as we talked about Ethereum yesterday. Successfully implemented the Capella upgrade, which was Shanghai and Capella combined, and now we can potentially withdraw our cryptocurrency out of the Ethereum network if you have it staked. Now, of course, if you're using Binance, you may have seen, they're still not letting you withdraw or unstake yet. They're going to wait a little bit just to make sure everything is safe and secure, but probably in the next couple days, we'll be able to move our cryptocurrency in from Binance, which will be good. What we've got here is a failure to communicate. Wasn't that, what movie was that? Well, I know it's in a Guns N' Roses song, but it's a movie, I forget the name. Anyway, let me start off with our graphic here, a wonderful graphic to start the day. I tried to put myself on a roller coaster because you just don't know which way earnings season is going to go. And I thought I would just have a little bit of fun with this one and talk about preparing for earnings season. What are some things you might want to think about? Well, first and foremost, when earnings season happens, you know that there's a ton of volatility. And right now, the amount of speculation about what's going on with the financial firms is off the charts. A lot of people feeling they're going to miss earnings. Other things are going to have great earnings. And honestly, I'm not trying to put myself in one camp or the other. It just is a lot of speculation. Now, tomorrow, is it cool? And Luke, I thought it was, there's another one. The kids play the violins. I can't remember. My brain's not working today. Let's go and just show you some charts here, and then we'll go through the earnings calendar. So first off, when you look at earnings season, it's important to find out what your stocks are. So if you have a portfolio of securities, just make a list of what those are and go to your favorite earnings calendar and find out when they are reporting. So I like to use the Zacks earning calendar. There's a whole bunch of other ones, so feel free to use whichever earnings calendar you like. But I use Zacks typically for the show, and as you'll see here, if you look at this week, it looks really boring. You have 5 earnings on Monday, 14 on Tuesday, 26 on Wednesday, 39 on Thursday, and 12 tomorrow. And you're like, well, that's boring. No big deal there. Well, honestly, if you click here, look at the 12 that report tomorrow. JP Morgan, United Health Group, Citigroup, Wells Fargo, BlackRock, PNC Financial. I mean, those are just juggernauts. Look at the market capitalizations here. You've got over $1 trillion worth of market cap reporting tomorrow earnings, and that could really set the tone for tomorrow's trading activity. Of course, I'm long JP Morgan, so that's going to be a wild one for me. So I guess in keeping with the wonderful graphic here, which is preparing for earnings season, what sort of things should you look for? Well, let me just bring up the daily here let's go JP Morgan, just because that's the one that's coming out tomorrow. And I'm presently long JP Morgan, and I have calls sold against my position, so I should be fine there. I think my average, my strike price, which I initially put these options at, or these shares at, was 132. So, right now I've got calls at 132. So if it gets above 132 tomorrow, fine. So one of the ways that I would do it, let's just assume that I don't have anybody in any positions open right now in JP Morgan. Let's just make the assumption. I do, but let's pretend I don't. One of the things that I like to do with earnings season is be, I guess, the outlier here. So, for example, if you look at where the next supply zone is, I think most of you probably would look at that 132 level and say, well, it's hit the tails here a few times. That might be one spot. You might also look a little bit lower here and say maybe it's across these most recent kind of highs that it's put in. So, it looks like there might be some issues right around 131 or maybe 132. Well, if I was going to play earnings, I certainly wouldn't be thinking about my sell orders right there at 132. If I was playing earnings, I would be going much further out. So let's say this 135 mark. And the reason for that is typically what happens during earnings season, you guys have seen this countless times on the price charts, is you don't get like just a little blip like this. It ends up being, as soon as that thing reports earnings, a huge spike up. Now, unfortunately, markets will be closed, so you'll be trading the after-hour session if you're trading the individual equities. So what you can do is, I like to put orders that are way out of the money, and if I get filled on a put option, let's say I'm looking to go short on this one, I might just actually buy puts outright when it gets up to this level. And so, if the puts get up to this specific price, I'll look to buy those ones. And Generally, the premium is going to be lower than normal. Granted, it's going to be high just because of the pure volatility of it, but your put options after a big jump up are going to be generally cheaper, and after a big sell-off, your call options are going to be cheaper. So you could almost play this two ways. You could say, I'll do almost a little straddle here, where I have a buy order for call options down at this low at 123, or a buy option for puts at 135. And what I'm expecting is a huge whipsaw, and then potentially, it'll drift back down into the middle of that range. So yes, Boss Poopa, popcorn day, yes. The big challenge here is, at least for me, is New York Stock Exchange listed securities trade rather differently than the NASDAQ. NASDAQ tend to have a lot more pre-market activity. You see huge volumes before and after market, whereas with the Dow, it always feels like there's just muted activity on earnings announcements. And I'll show you that one tomorrow. Of course, we'll be looking at this when we do the show tomorrow, when we look at JP Morgan and Citibank and Wells Fargo. But, just something to think about for those of you who are looking to trade these. I certainly, let's go to Wells Fargo since I don't have any lines drawn on Wells Fargo. You look at something like Wells Fargo and what play might I make? Well, just looking at our next potential supply zone, what do you got? 41.50. Okay, maybe that's an area I want to go, but that's still rather close to price. And if I look at percentage move here, to get from current price to that overhead supply is only 4%. Look, Wells Fargo could easily move 4% on an earnings beat in the after-hour session. So I guess, do you go crazy and put an order way out here and say at 46.57? Why not? I mean, what's the worst thing that can happen is it gaps up way higher than 46.57. Now, the good news for just about everybody here is this will already be priced in as soon as those markets open, right? Because NYSE is going to report BMO, which is before market open. So, it'll already be priced into it. You'll have an idea of where price is going to open up. But quite often, it has just a huge shock factor, the upside, and then it whipsaws once that market opens. And to me, I do find opportunities there. It is very risky, right? Because you're trading that fear, that volatility. Typically, what I'm doing here works better for NASDAQ stocks. I know it seems weird. You're like, well, why would those be different? Why would a NASDAQ trade differently than NYSE security? Well, let's go back to our earnings calendar here and let me show you real quick. Let's pick something that reported this week. Granted, it was a very light week. I didn't see anything that was really that exciting. CarMax. So typically, when you guys look at this, you see where it says BMO? It'll tell you the time that these open up. Normally, if it's BMO, it's a New York stock. If it's AMC, it's generally going to be a NASDAQ stock, which is another weird little quirk thing that those exchanges do. So let me see. Do I have anything here that was good? Sportsman's Warehouse. No, not high on my list. So I don't really see anything here. Thought there was one that reported today. Oh, I guess we could use Delta Airlines. So there's DAL, but that's New York stock. I want to show you the difference in reaction of something that reports aftermarket close versus something that reports BMO. So unfortunately, I don't have any of those choices here today. But let's just go look at DAL. Right. So here's your Delta Airlines. Throw that onto a 5-minute time frame, not second. That'll be a little too fast for me. I'll go 5 minutes. And we will go into the extended trading hours. So you can see here when they reported earnings, you had this spike up and then just kind of drifted lower. Generally, with New York stocks, you don't really get these big pops. So this may have been, it just seemed a little bit odd. That actually would not have been the, let's see, was that the time? No, that would not have been the PPI numbers that came out today. So typically you don't see these big moves pre-market, but you do get these really big swings as they open up. And I do think that there's a lot of opportunity there, but I don't go to the closest supplier demand zone. I'll use levels that are much further out, especially when we have our popcorn trade of the day type stocks. And you may know that next week we actually have a couple popcorn trades of the day. Number one is going to be Tesla or Netflix, which reports on Tuesday. There's your Netflix reporting on Tuesday, the 18th, and I believe on Thursday you have Tesla, or maybe Tesla's on Wednesday. Yeah, there's Tesla. So obviously that's going to be your major market mover out there, and you could see some really big pops. Now, because the option market is going to be closed, these types of trades become a little bit harder. You could, if you wanted to, go use the underlier, right, and just go short on that security or go long on that security at really far out supply and demand zones in that after hours session. You've seen it time and time again. I don't know if I'll be able to pull up an example here right now, but let's bring up Tesla and their last earnings, see if I can potentially, I'd have to go back months on a intraday chart, which would take me forever to do. See if I can go back out months. You'll be able to see where the last earnings was. There it is. All right, so here's Tesla's last earnings, and you can see that everything in the light blue, that's after the market closed, and this is in gold or whatever color, yellow, that's before the market opened. So you can see they came out with earnings. It dropped sharply. It rallied off their earnings, and then once that market opened up the next morning for pre-market trading, sold off aggressively. And I don't know, you can actually see it actually did come down into a demand zone on this daily time frame. So using that as supply demand zones, good news here is you had time to evaluate that drop in, this is Delta Airlines, Delta Airlines, and you can see where it came right back down into that nice opportunity there for a potential buy, because people freak out on earnings, whether it's good or bad. We get these really weird knee-jerk reactions. Now let's look at Tesla's, because I thought I had Tesla up there. And we'll look at Tesla's last earnings, which was way back here in, there it is, back in January. See what did Tesla do. So Tesla, on their earnings announcements, rallied up aggressively in the after-hour session. The next morning in the pre-market, it opened up and then rallied. And right as it opened up was a high point. It sold off. Well, it sold off, but recouped its losses over the course of the day. So would be nice to know if that was into a supply zone, but it does not appear that it was. Actually, yeah, it actually came right up into a supply zone on this 15-minute time frame that goes all the way back into December 16th. So anyway, when we do these earnings announcements, there may be some opportunities out there for you. If I make any plays, I won't be making any tomorrow. I'm just going to let the bank stocks go and see what they do. What I will be looking forward is potentially Tesla and Netflix on Tuesday and Wednesday of next week as potential opportunities for me to make some trades. And if I make them, I will let you guys know. You could do that with an OCO type of order, right? If you're doing equities, yes. So if you're doing straight stocks, yes, you could do OCOs. The issue there is in the after-hour session, when you'd be looking to enter those orders, you cannot use market orders. So everything will have to be a limit order, and that entails a bit of risk for you. But you could go out there with not necessarily an OCO, but you could just say, all right, I want to short if it gets up to this price. I want to buy if it gets down to this price, and wait for the earnings announcement to happen. Or you wait for the regular market hours to open, use those kind of identified supply and demand zones as levels, and buy or sell options based off of those points. I would like your opinion on buying some physical. Okay, no problem, Rob. Let me get through this and I'll get to that one. If you own calls, why not short pre-market at the highest price you think you may get to? I mean, you could. I mean, there's a million different ways to skin that cat, Michael. If you own calls, so I don't own calls on the position I'm in. I've sold calls against a position that I'm in already on JP Morgan. So I have JP Morgan, which reports tomorrow, so we'll see how that one goes. I have the 32 calls, so if it gets above 32, my shares get taken away, and I have a great rate of return because I've been selling for the last 3-4 weeks. I've been selling calls against my position and generating about $1.50 to $1.90 premium per week, which has been a really nice rate of return on the JP Morgan. Bank of America as well with some nice premium. So there you go. You could definitely do that. If you have calls, if you bought long the calls, which means you think it's going to be going up, why not short pre-market at the highest price you think it may get to? If you do that, if you're long calls and you sell short, you're basically going to take away some of your profits. So if you think it's not going to go higher, then you should close your call position, unless you're talking about pre-market and you can't trade those in the pre-market. So let's see, Tom. I believe the neutral option play could do well in the earnings announcements. Lots of premium before announcements that crushes the price settles. Yep, it will at least watch XLF. Yeah. And this is the tricky part, because a lot of people, and this is the problem that a lot of my friends have had over the years, is they try to buy options going into the earnings announcement, where typically the premium is so high going into the earnings announcement that even if they have a huge move off of their earnings announcement, they still would lose money on those options because the premium was so high. It just gets crushed out over that next trading session as the volatility just disappears out of it. So I'll be looking forward to it. I'm excited because it's just one more thing to look at. Now we get earnings, which can be great drivers. I'm kind of bored with the inflation talk. I'm bored with the rate increase talk and GDP and retail sales numbers, which, by the way, come out tomorrow as well. So something new to focus on for these markets, give it a little bit extra activity, which should make it fun. All right, let me see. What did I have? Market. Well, by the way, I was having fun at the roller coaster. I don't know what's going on with my teeth. So these ones, it looks like I got tarnished teeth and a second row in there. I know you guys like these pictures sometimes, so I threw a couple other ones on here. This one's a good one as well. And then I like this one, although I don't quite know what the roller coaster is doing, but there you go. It's my silly graphics for the day. We'll be selling premiums and go for... Okay. And that's what I'm going to be doing, is I'm going to be most likely selling premium. Right. I'd ideally like to do it the night before at a much higher level. So, going into the earnings season, if we go back to that JP Morgan, let's go back to a daily here. Yeah, I'm talking, once those markets open, there's some nice opportunity to go directional. But if you had, if you're looking to sell some options on JP Morgan before that earnings announcement tomorrow, you probably could have gotten a lot more premium than normal if you were to sell, let's say, the 132 calls. I probably would have done great if I just waited till today to sell my calls for earnings tomorrow. I'm probably getting the same rate of return as I did for a week ago, just because the expectations now are unknown and there's a lot of volatility on JP Morgan. So yeah, going into that earnings announcement the night before, generally premiums get really high. When you have the aftermarket close, it makes it interesting as well because most of those NASDAQ stocks have huge pops after hours. Therefore, you have the whole trading session to sell your options and collect some premium there. Allows yeah, my European ones. That was a good comment on the teeth there. Okay, so I had a couple questions come through. Let me go to this one real quick, and then we'll dive into overall markets. This is from Les. He says, with the CPI data coming in a little under consensus, why didn't the markets perform in a more positive manner? Well, remember, at surface, and this is the problem with economic data. This drives me nuts about economic data. At surface value, you're thinking the right thing, Les. You're like, wow, inflation's better than expected, therefore good for markets. Yes and no. Yes, it's good for markets because inflation is declining and getting nearer to that 2% target that the Fed has established. However, it's bad because if inflation is under control, what you're basically you're giving the Fed more room to move. And it opens the unpredictability to the Fed here. So if the CPI numbers come down, then a lot of people feel like the Fed can continue to be aggressive. And even though if CPI numbers go up, people feel the Fed is going to be more aggressive. In this case, it opens the question of what is the Fed going to do? And I believe that yesterday, after the CPI number came out, it was a big looking around, going, "Oh, inflation looks good. What's the Fed going to do?" And when we looked at the Fed funds futures, which I'll bring up here real quick for you, there wasn't much movement there, and that was basically the expectation was that the Fed's still going to raise 25 basis points, which I am of opinion that is going to happen. It's dropped a little bit since yesterday, but now it's interesting. A month ago, there was actually a talk of maybe a 25 basis point cut. So I think that the reason we didn't see the market rally more on that really good CPI data is, number one, we are still way higher than expected, which means we're going to see still more aggressive policy by the Fed. Your gut would tell you that the market should have rallied, and they didn't. And kind of why is that? I don't know. That's just that market mystery that we have to unravel. Now, if we look at today's trading, now all of a sudden you got markets ripping to the upside. And let's go, and perfect opportunity to segue into what our top markets did. I'm going to start at the top and work our way to the bottom. Here's your NASDAQ, which had that 3-day slide and erased it all today. Even yesterday with that great CPI number, it was a down day. Now today, from an economic data perspective, we can go and look at the 13th here. Come on. And you can see that the PPI number, great. I mean, this is a really soft number. This is excellent, right? This means that consumer prices have been dropping, which really should drop the next CPI reading as well. Negative 0.5 was great. We've done that 3 times over the last year, so that's awesome. That's obviously a very good piece for our markets going forward. Now, as far as the CPI and the PPI combined, I think that yesterday's reading was still people just going, I don't really know what this means. Let's see what happens with the PPI. Now, PPI came out way better than expected, which generally leads to more consumer price index declines. Therefore, we saw a nice big rally today. And I think that today's rally has a lot to do with earnings season kicking off tomorrow as well. So that's one thing to keep in mind with why we had such a beautiful market. So let me start at the top, work our way to the bottom. NASDAQ, as you can see, was your number one, nearly 2% gain today. And when I looked at the intraday timeframes here, it was just beautiful. Really, from open to close, just aggressive rally almost all session long. And you can see here just in the last hour or so, rolling over a little bit, but not that bad. That was your best performer, 1.99% as where we are right now. If you know number two, Bitcoin, still looking good. I've got that little tag there at basically 31,000, which we came really close to hitting today on the futures market. The futures at a price of 30,900. Surprising me that it's still going. Hey, awesome. I like it. Keep going, Bitcoin. Move to the upside. 31,000 I thought was going to be a stopping point, and we'll see if that holds. But I'm still bullish on it long term. And long term is the key. Gold, 1.5% move up today, continuing that breakout. So I think that was either Skilled Stocksman or GD. You were talking about gold. Looks great. I thought we'd have a little bit of a deeper pullback. I really thought we'd come back down to that 1990 mark, which is just below that 2000. Right, obviously the 2000 held here. Now we're seeing that next leg up. So great news for anybody who's holding metals. Of course, for me, it's just one of those things where I torture myself by looking at silver because it's up to 32.72. And of course, as I mentioned, all my silver will be taken away from me at a price of $21.50. I left $2.20 on the table so far, and it's not even Friday. Oh man, and I had 2,800 shares of that bad boy. That was a little bit of a miss on my part. Russell 2000 was your fourth place. So we're off the podium. Technically, no breakout happening here. No great uptrend happening. It really is just lots of chop. If you read that article I wrote, oh yeah, by the way, I wrote a new article for barchart.com, which went out today, and I'll see if I can find you guys that link. With regards to that Russell, that was that proverbial canary in the coal mine today, looking great, but I still don't think we're out of the woods. If we can't make new highs on this Russell index, and when I don't mean necessarily new highs as far as going all the way back to February, but even just this high that we achieved in April. On April 3rd, the Russell 2000 hit a high of 1827. Well, that's only 19 points above where we are right now. Not bad. I mean, that's basically, we could get there tomorrow. We moved 23 points today, so another 1.2%, and we should break that high from April 3rd. If it doesn't break that April 3rd and kind of starts drifting back down, then I'm still in that bearish camp on the Russell 2000, right? Again, we've seen these other indexes like the NASDAQ performing really well, making new highs. We'll get to the S&P in just a second, but it's broken out of that same high that the Russell is struggling with, and same thing with the Dow. So the other index is looking great. Russell is still lagging here. If that gets back on track, then we could see a pretty decent bull market here going forward, which would be a surprise to most people out there. But hey, you just had more money pour into the markets and bail out these banks and financial service companies. Therefore, what do you have to worry about, right? That's the attitude I think a lot of people have right now with these markets. S&P 500, 1.3%, rallying right back up to its highs of yesterday. So it's kind of a teeter-totter here with that CPI and PPI number reactions. As far as the condensing formation we had here, some could argue that we've broken that. We are out above that downward trend line, right? Yeah, Robert, the Russell is definitely the weakest index. And, this is one right now that is very interesting to me. If you look at what's going on with the S&P, I drew a downtrend line from the peak on, just for our podcast listeners, from the peak on August 12th of last year. The second point was between the high on February 2nd of this year, and then our third point for confirmation happened on April 4th of this year. So you have that nice downtrend line. Well, it's been also making higher lows, so you kind of have this compression going on, and today we could make the argument that we did break it. Now, it's not a convincing break, but it is a close above that downtrending line. So sentiment is starting to shift here a little bit, and anybody who's watching this pattern, you actually saw, let's see, who else was pointing out this pattern? It was funny because I look at this type of stuff. Oh, Sam Evans, he was looking at this saying, he's looking at that same wedge formation, and this is kind of why it works, right? You have people who are looking at those same basic chart patterns. So keep your eye on this one. Remember, for me, the S&P is the lead dog in the market. And as you start to make new highs here bullish sentiment's going to start to pour in. So the Russell's starting to look a little more optimistic. The S&P finally just barely broken this channel or pennant formation. That's bullish as well. Keep your eye on these highs that we're back on the 2nd of February, which is 4,208. You get above that, then I think you're going to challenge that 4,300 mark. Do you look at how it traded compared to yesterday, the ES? Not really. I mean, it depends on what I'm overall looking for. In this one, I'm looking for the big picture change, right? And the big picture change is we've got consolidation going on for the better part of 6 months, actually more than that. And now we're finally seeing a slight breakout. So this to me is the most important thing, that we actually closed above that downtrending line. Now, do I look at how it traded compared to yesterday? So yesterday, extremely bearish, closing almost at the dead lows, looked horrible, right? Today, economic data saved the day. That PPI number was an absolute savior for this market, causing it to rip to the upside. So I don't put too much emphasis on yesterday's candle anymore. Right? That sentiment has been erased. If there was bearishness there, it certainly got blown out today. That's the extent of it, at least. I try not to make too much of it. Again, it's all about what happens tomorrow, right? Now you've got those major banks reporting earnings tomorrow. We'll see if that actually lifts these things higher, or maybe the banks disappoint because of all the scandals that's been going on in the banking industry. So that's your S&P. Here's the Dow, which looked great today. You know, we've had kind of stair-stepped up supply zones, and now we're in an area where it gets really challenging to identify where is a supply zone on the Dow. You've got all these weird little highs at almost levels on top of levels. So I don't see anything here that I would deem to be a great supply zone above where we are at. There's certainly some chop. You could argue that any one of these could potentially stop price, but the big important part here is trend. Right? We had 4 huge green candles, a little bit of hesitation, and all of a sudden it starts to rip to the upside. It almost looks like a flag formation, and that typically is going to lead to higher prices. So at this point, you look at the NASDAQ, the S&P, the Russell, and the Dow, and they're all looking rather positive. The only one that's not like screaming bullishness is the Russell 2000, and that may get there soon enough. Final one on this list is crude oil. Down 1.32%. We had that breakout yesterday, and it retested today. So the question is, will this retest of that previous high hold? Is it like a one-day retest and then we keep ripping up, or does it finally do what I thought it was going to do, which is close this gap? I was wrong on that one, but ultimately I may be right at some point on that Russell. Let's see. There we go. Okay, cool. Let's go to IWM. So, when you look at this IWM, if I take everything out, if I just focus on the last 2 candles, it's a bullish harami. And that's what you have. You have a red candle followed by this small little green one. That's a bullish harami. But the location doesn't really help you. So I don't put really any emphasis on that one, Dave. You're right that it did close inside the yesterday's range. But with that candle, I'm more using it as a measurement of strength or weakness. And basically what it means is just yesterday had less conviction than the day before, if you're looking at the ETF, IWM. It's a bullish harami on CL. Bearish harami. Because you have an up move, and you have a green candle followed by a small little red one. So that's actually a bearish harami formation. So typically when you have the big candle is green and the small one is red, that's a bearish harami. And when you have like IWM, that's a bullish harami because you have a red candle followed by the green. But this needs to be at the bottom of a downtrend, and it's not. You do, again, on crude oil, if you're looking at the CL, that's a bearish harami formation right there. So keep your eye on tomorrow's trading activity and see if we get follow through to downside. All right. Looking to short the crude oil or the Russell? So crude oil, obviously you're shorting extreme strength right now, but it's due for a pullback. And if you look at the IWM, if you're looking to short this tomorrow, I would second guess shorting the Russell tomorrow. I don't see that as a potential play, mainly because it's been chopping sideways here. It really hasn't done much. But crude oil looks like if you get confirmation, you could certainly get a nice sell-off there on crude oil. All right, so let me go here. This is one less. I'm not too familiar with it. It's not something that I really do. So, for example, if you go here and say, with options trading, what is a sweep? I see call sweeps that are both bullish and others that are bearish. Sweeps are generally institutional orders. It's where they're taking a large order, a big order, and splitting it up so that they don't move the markets. But really not my area of expertise out there. It's really more of an institutional thing when you have these sweeps done by institutions, and I don't really follow options institutions. I'm following the underlying price chart, so I can't help you too much there, Les. Sorry about that. Let's see, what else do I have question-wise? Virginie says, I have looked at the options on UNG and was surprised by the low price of puts, for the puts. For example, the May 19th 6 put premium does not even provide a 1% rate of return. Is that what you have as well, or are you surprised as well? No, I don't. You're not going to get too much for puts at this point. I think that basically what it's showing is that natural gas has kind of slowed down here and bottoming out. When we had John Rowland on the program, his talk track was, $2 seems to be that floor for natural gas. And I kind of am in that camp as well. So let's go look at natural gas, which is down over 4% today. You're just smacking against that floor. So it feels like this is that stabilization point. We hit it back here in February. We've hit it a few times over the past month. So, I wouldn't expect there to be too much premium on the puts because it's not going to go to negative. It's not going to go negative. Actually, somebody commented, and I thought this was a really good input. I was commenting on Bar Chart's Twitter feed. They got a pretty good Twitter feed out there, and one of the charts was about natural gas, and I said, "Hey, eerily reminds me of 2020 when we saw crude oil go to negative $40 a barrel. Could it happen with natural gas?" And somebody responds, "Not possible. It will never happen because they'll just burn it. They'll just burn it off as opposed to delivering it. So if you had the oil or the natural gas to be delivered, they'll just burn it off as opposed to what do you do with oil? You got to do something with it. You have to store it somewhere. Natural gas, you can just I'll let it go, evaporate in the sky and create ozone problems. But so you won't see it go negative like natural gas or like crude oil. But I don't think you'll have that much of downside move there. So look for that rip. And Sly, I'm a little bit gun shy on this one as well, to be jumping into natural gas. It just seems to keep drifting down. If you notice this price chart, this has been one hell of an ugly chart. And, technically, let's just take out the fact that this is natural gas. Technically, when I look at this chart right here, if it wasn't natural gas, I'd say this thing is going lower. It's just downtrend, starts to rally, comes back down to the ground, and it's just basically, it's like it dropped a tennis ball on the concrete, and it's getting lower and lower and lower and lower, and it's sticking to that $2 mark. Normally, it would break that $2 and have a huge drop down, but I just don't see that happening with natural gas. There's going to be a floor in it where, and judging from what I've heard and what John Rowland was talking about, $2 seems to be that floor. So, this might be a nice place to be playing rips up, but I don't expect this to have a huge run here. Maybe some little pops up and down, so there might be some tradable opportunities there with natural gas. But Virgin, it doesn't surprise me that there's not much premium in those puts. All right, let's go to this one. I think I've heard you say that Hex cryptocurrency is a scam. Yes, it is. If that's what you said, can you please explain why that is so? It is a scam. So I actually brought this up before on the show, and I brought up maybe I did it in my CIL. I think I did it with my CIL. But let's talk about what Hex is, right? Hex is a cryptocurrency created by a guy who, if you dig for him on social media, is a world-renowned scammer. He's been involved in many different scams. He's been sued many times for fraud. He's a fraudster. And as I've shown my CIL students, I can create by the end of the show today a cryptocurrency and convince all of you to go be my minions and go out there and pump it to everybody you know. Let's get this thing going. I can give all of you some of it as well. So I'm using you as multi-level marketers to pump my garbage. So let's go to their website and let's just understand before I show you this website. When you deposit your money in the bank, your bank will give you a rate of return. If you're a Chase customer, it's going to be 0.01% for you to keep your savings there. If you are a Ally Bank customer, they're going to give you 3.75% rate of return per year. Why? You all know this because I've said it dozens of times. It's fractional reserve banking. Your bank takes that money, they vet their customers, and they lend that money out to these customers based off credit quality. Someone's got an 800 credit score. Hey, you know what? We'll give you this auto loan, and that's going to be 7% for you. You got a 540 credit score, we'll give you this auto loan. It's 13% for you, right? So they're going to loan that money out, and they know they've got all this money coming in from customers that they just get to lend out. It's insured as well. So that's not a scam. That's just business, right? They're borrowing money from you, and they're paying you interest, and they lend it out. That's normal. Why I call Hex a scam is there's no way that they're generating revenue. So here's their website. And please, guys, don't buy this. It's a scam. This Hex money averages 38% returns a year. 38%! Oh my God, I better join in here. So what this scam artist has done is created a Ponzi scheme. Because if somebody's going to pay you 38% rate of returns per year, you're going to want to know what? If I said I'm going to give you 38% rate of return per year, you guys should all look me dead in the eyes and ask me one quick question. What is it? Type it in the chat what you think that one's going to be. I want to see what your reactions are. And I'm stalling here so I can let you guys type for a second on what question would you ask of me if I said I'm going to pay you 38%, you deposit your money with me, I'll give you 38%, right? So your first question should be, well, what are you doing with that money, right? What are you doing with that money, or how are you going to pay me 38% rate of return? It's too good to be true. And as they all say, if it sounds too good to be true, it probably is. So what this clown scam artist is doing is they produced a specific amount of tokens. They have some sitting in a fund that they're issuing out as quote unquote payments. But they used to build themselves as the world's first high yield. They used to build themselves as the world's first high yield savings account. It's a CD. So when you open a CD with a bank, it's the same process. A CD is a savings account that's locked for a fixed period of time. So I do a 1 month or 1 year CD. I've now locked my money in there for a year. They still take that money and they lend it out to other customers. That's just the nature of the beast. For the vegetarians out there, sorry, I had In-N-Out today. With Hex, you deposit your tokens into the network. So let's say you buy $1,000 worth of Hex and you deposit in there. Staking, right? It's not staking. You're just depositing into their network. What they've done is set up a system where they'll pay you 38% is what they're saying, and that's coming out of a fund. So the whole goal is to drive the price of Hex up. So what they will convince you to do is you stake more. The more you stake, the higher rate of return you get. And I can't use the word stake. I guess the more you invest, right? Let's use that right term. The more you invest into Hex, it removes it from the supply. So the more you take out of circulation, you have more people chasing fewer that are on the open market, if that makes sense, right? If let's use Bitcoin as an example. If there's 21 million Bitcoin that are in circulation, that's all sitting at Coinbase, that means that you could all buy 21 million Bitcoin if you wanted. However, when I take 1 million Bitcoin and put it on my Nano Ledger right here, my little storage device, it's no longer on that exchange. It's removed from supply. So now everybody's chasing 20 million Bitcoin. And the more that people take it off those exchanges, you remove it from supply that people are trying to buy. So with Hex, what they convince you to do is the more you deposit, the higher rate of return you get, and the longer you lock it in for, the more rate of return you get. And now they convince you that you need to be what's called a hexicant, and you need to go out there and convince everybody to buy Hex, which now is more people buying limited supply, which drives that price up. And it's a Ponzi scheme because at some point, people are going to want to take their Hex out and sell it. And as soon as that happens, this whole thing's going to come crashing down. They're not investing that 38%. There's no investments being made that will make you 38%. They're giving it to you out of pre-mined tokens. So, for example, I could create a token right now that has 1 trillion tokens, right? We'll call it the TraderMerlin token. Okay? I have 1 trillion tokens, and I take 500 billion of those, and I keep it for myself, and I put it in an account. I take that other 500 billion, and I distribute out there, and I convince everybody to buy it. I keep a nice chunk in my personal account. Let's say I keep 200 million or 200 billion, and I get you guys to push the other 300 billion out there, right? And I say, hey, I'll give you guys a 40% rate of return, whatever you deposit. Whatever you deposit, boom. So you deposit 1 million TraderMerlin coins into the account. And now I'm paying you out of this huge account over here that I created. It's just, there's nothing. So if I give you 40%, let's say you deposit 1,000 TraderMerlin coins, all I have to do is give you 400 out of this massive pool of nothing I have back here. I've got 500 billion sitting behind me. Here, there you go. You deposit 1,000, here's 400 a year. So they're using this fake pool of money to pay you that 38% rate of return. But there is no generation. No generation of income. At some point, this will come crashing down. It's a scam. And if you look, if I was a legitimate business making my customers 38% rate of return, I'd have a much different view of how I would be marketing this. Here's how they market it. The Hex Diamond. Richard Hart, who is the big con artist behind this, I believe he's a con artist. So he bought the world's largest cut diamond. It's called Enigma, right? So there's his 555 carat diamond, right? Now he's sponsoring NASCAR, so you go to hex.com. What's sad is he took down his Instagram feed. So he used to have, his Instagram feed was ridiculous. It was so over the top. Basically what this guy would do on Instagram is he would go out to all these famous fashion places. Yeah, he took his page down. He took his whole page down recently because it was just him going into like Gucci and buying 15 bags and the stupidest looking outfits you could possibly imagine. Basically walking out of the store with $100,000 worth of merch and taking a bunch of pictures with it. And this was store after store after store. Anyway, that's not the type of guy you want to be investing money with. Anyway, there you go, KF. That's why it's a scam. It's a multi-level Ponzi scheme. At some point when you try to pull your money out, you might be the one holding the bag. So just shy away from it. Let's see. If you've done a show on what happened to the U.S. dollar reserve currency, but the yuan and ruble is, we haven't. I mentioned a little bit, but I haven't done a full show on it. I need to reach out to John O'Donnell again. I'd like to get his thoughts on it, and maybe we can do a back and forth with John O'Donnell here in the near future on that one. Let's see what else I have. How do I get it back if I close my account? What are you talking about, Michael? What back? Your Hex? Well, it's locked in for a certain period of time, and then you could withdraw it theoretically and put it onto a different exchange. And here's one of the main ways you can tell something's a scam. If it's a legitimate cryptocurrency project, or at least has the aroma of a legitimate cryptocurrency project, it'll be on the major exchanges, right? There's a vetting process at Coinbase and Binance. So while I think a couple of those that they have there are scams like Shiba Inu and Dogecoin, for the most part, they're legit projects that somebody's actually working on. And if you go over here to CoinMarketCap or any of the cryptocurrency sites, I just typed in Hex. Let's scroll down here to where it says markets and see where are they traded on. So if I wanted to buy and sell this one, where would I go? And you notice here, it's just all Uniswap. Everything is Uniswap. Uniswap is a decentralized exchange, which means there is not one exchange in this whole entire world that feels it's viable to have Hex on it because it's a freaking scam. And people are absolutely crazy about this one. They all want to be buying Hex. And when you just research Richard Hart and just check it out for a little bit and move on. Anyway, I won't spend any more time on this. I can tell you guys are bored and are uninterested. So there you go, KF. That's my answer to that one. And that's it. So let's see. Did we look at the dollar today? Nope. Everyone's saying the dollar is done, time to buy. I don't know about that, Chase. I'm still, there's a period where I was very bullish on the dollar, but I think you might start to see more continued downside here. Let's look at that dollar index, down another 0.5%. So the level we talked about was getting down to this 101, which was really the yellow box that we have on this. Today closing at 101.01. That's convenient. So 101 is a pretty solid potential turning point on this one. It could be interesting to see if we get that bounce here. We did bounce off that yellow box. It was 4-day rally up, and now all of a sudden 3 days we've given it all back. After this, I want to go out a weekly time frame just to see what that picture looks like. After this, there's some pretty good downside movement here, and some could argue this is a head and shoulders pattern, right? You've got your, let's just do the drawing. Since I've got the time, let's do pen mode. So a head and shoulders pattern would be this. We go from there to there. I guess it's in red today. There's your left shoulder, there's the head, and then there's your right shoulder. So for those of you who are technicians and like technical analysis, again, measuring objects are the way that a lot of traders like to do this. That would be your measuring object for the dollar index or for the head and shoulders formation. And let's get rid of that one. And we'll move that down here to the break. So if we do get a break down below 101, that really kind of forecasts a price of 88 on the dollar, which, we haven't seen for quite some time. Well, I say quite some time. Last time we saw 88 was back in 2018. So anyway, just something to keep an eye on. I do think that we should do a show. We should do a show on CBDC, the Fed now, U.S. losing the reserve currency status, and what might that next reserve currency be. But I just haven't had time to do a lot of research, and I've just been busy with a lot of other projects, so I have not dug into that. But at some point, I probably will do one for you. I really like the story behind reserve currencies around the world and kind of how long they last. There's this 100-year cycle that just happens over and over and over again, and we're at it. We're at that 100-year cycle. So anyway, let me read off to you what's happening tomorrow. So we've already looked at the earnings calendar for tomorrow, but I will bring that one back up here just a second. For the 14th, 12 companies reporting earnings, and here they are. JP Morgan, United Health Group, Citigroup, Wells Fargo, and BlackRock, PNC Financial. Those are all your big daddies, and again, lots of just major financial firms reporting tomorrow. So this will be very exciting to see how that all kicks off. If you're looking at the earnings calendar for tomorrow, well, let's go and show you what's happening for Friday. We do actually have some announcements. Retail sales numbers for the U.S. and import prices. You also have an FOMC member, Waller, will be speaking. You've got capacity utilization rate, industrial production, as well as University of Michigan consumer sentiment. So yowzers, going to be a busy day, not just on the earnings front, but the economic data front as well. So it should be a wild, fun, exciting day for tomorrow. Is the 100-year cycle called I don't know, Michael. That's beyond my level of intelligence there. I can't even pronounce that word. The Kondratiev? Maybe. Did you try to unstake your ETH from Binance? I did, Jill. It still says I am unable to. I did read through their literature, which says no definitive timeline, but they are going to let you unstake it. Just right now, they're waiting, making sure the network is stable. So at this point, it's been about 22 hours since the upgrade happened to Ethereum. All has been running smoothly. And the good news for us, Jill, is not only is it goes smoothly, but the withdrawals that people have been unlocking and unstaking their crypto have been very minimal. Nothing near the panic that people thought they would be seeing. So that's really good. All right, that's going to do it. I was planning on doing a shorter show today. I got electrical issues going on here. I got ghosts in the walls happening in the house here today, so I need to go fix some electrical stuff. I'm glad this show didn't drop on me. Anyway, that's your economic calendar. That's your earnings calendar. Got that stuff out of the way. Tomorrow's Friday, which means whiskey time. Hopefully it'll be a good trading day. I didn't make any trades today, but hopefully I'll be able to make a couple tomorrow. We'll discuss some of those. If you guys have any comments, questions, feedback, send them on in at TraderMerlin@gmail.com or put your comments down below that YouTube video as Les does on a regular basis. Thank you, Les, for all the comments and feedback, and all the rest of you. Thank you so much for your support. I will see you tomorrow. Happy trading.